Yesterday, out of nowhere, Reuters reported that OpenAI is laying groundwork for an IPO that could value the company at up to $1 trillion, and they're reportedly discussing raising around $60 billion in the offering. Trillion, 60 billion, everything is bigger in AI panic mode. It is November 1st, 2025, and you're watching the Daily Dose of AI. OpenAI isn't a normal SaaS company. It's the maker of ChatGPT, a major model provider, and now it's reorganized its ownership. Microsoft holds roughly 27%, and the OpenAI Foundation holds about 26% of the restructured group. That governance setup matters for how an IPO would behave in public markets. OpenAI hit a reported $500 billion secondary valuation earlier this year after a roughly $6.6 billion employee share sale, which helped set the stage for this IPO chatter. Revenue is accelerating. Some reports put H1 2025 revenue in the low billions and project an end-of-year run rate in the high single digits to low tens of billions. But losses and huge compute bills remain a reality. The move to go public is driven by capital needs. Training and serving cutting-edge models costs insane amounts of compute, power, and data center investment. So the narrative is, go public now, raise massive capital, scale compute, lock in customers. OpenAI's business mix today: consumer products, ChatGPT tiers, enterprise APIs, and licensing deals. Each API call costs money: GPUs, memory, network, and engineers. Unlike classic software where marginal cost per user is tiny, generative AI carries non-trivial per query costs. That's why investors eyeballing a $1 trillion price tag are really buying future margin expansion, not proven margin today. But here's the plot twist. Reuters says OpenAI has discussed raising approximately $60 billion and could be valued up to $1 trillion if it lists. These are reported plans and discussions, not final numbers or a filed S1. Big talk, but nothing contractual yet. The OpenAI Foundation keeps influence. It holds roughly 26% and has warrants tied to milestones. Microsoft's stake is around 27% after the latest restructuring. That hybrid structure could shield some decisions from short-term investor pressure, or create awkward governance tensions if shareholders demand growth over safety. Competitors like Anthropic, Google DeepMind, Mistral, and Microsoft itself, which also partners with OpenAI, are all jostling for model leadership. OpenAI's advantage is brand, developer adoption, and large enterprise contracts, but none of that guarantees permanent exclusivity. Moat, maybe. Absolute dominance? Not inevitable. Risks that could sink or shrivel IPO value, compute supply bottlenecks, rising costs per token, tougher regulation, and the classic growth without durable margins problem. Also, public markets hate volatility. If OpenAI can't show improving unit economics, less cost per 1,000 tokens, or higher enterprise ASPS, that $1 trillion figure is a fragile headline. An OpenAI IPO at a hypervaluation rewrites playbooks. Startups will feel pressure to IPO earlier or accept larger dilution to scale. Cloud and chip suppliers could benefit or get strangled by exclusive deals. Regulators will finally have a public company to scrutinize, which is very different from policing a private lab. The governance structure is worth watching. If the foundation restricts shareholder powers to protect safety, public investors might be spooked. But if shareholders get more control, safety priorities could be deprioritized. That's a real trade-off, not a bumper sticker. The Reuters scoop is real. Reported plans for a massive IPO are on the table, but this is not a closed deal. The valuation and raise amounts are conditional, and the timeline, H2 2026, filing/possible 2027 listing, is conjectural. For devs and buyers, expect more investment in APIs and infrastructure, and also expect price model experimentation and possible vendor lock-in risks. For investors, big upside, big uncertainty. Smash the like and subscribe if you want more razor-sharp breakdowns. I'll keep tracking filings, stake changes, and the S1 when it finally drops. Until then, trillion-dollar headlines are fun, but read the footnotes. Is this the moment AI becomes infrastructure controlled by a single public company? Or just the loudest IPO story of the decade? Time will tell.